Hey traders, this is Heather, and today I want to walk you through a trade that we're currently in the small lot trading room at Simpler Trading. And we've already taken partial profits on it, but I think it has a lot more room to go. So even though you might be a little bit behind where we are, I think that you could still enter this trade this week and potentially see some profits of your own. So what I'm showing you right here is the daily chart of Robinhood, and I'm going to pull over a screenshot. This is the alert that I sent out last Monday, August 5th. We bought 3 debit spreads, 110, 115 calls that expire on August 22nd. So what we did yesterday as we saw this, we saw price come up here, is we took 2 of those debit spreads off for $3. So that was a little over 100% gain on the trade, and then we left 1 on. So I think that this trade can easily get up to 120, which is right up here. And I think it has the potential to go even further than that in the next few weeks. So let me show you what I'm looking at. So if we go down here, you can see that we are still in a daily squeeze and it hasn't even fired yet. Once this fires, we could see a 3 ATR move right up there. Now, when I first entered the trade, it had a 2-hour and a 4-hour squeeze already. Those have fired. So all that we've got left is that daily squeeze. But I love that price has gone all the way up here and it hasn't even fired yet. So this white line right here, if you notice that, that's a voodoo line. Specifically, it's a snow line. And you can see that that is really where price got rejected. Price came right up to it and then fell back, but it didn't fall hard, so that's encouraging. Price can get through snow lines fairly easily, assuming that there's enough momentum, so I don't think that it will have any problem getting through it. The next stop will be the next snow line, which is 119.49, and then looking a little bit further, we have a tree line, which is a stronger voodoo line at 123.76. So I think targeting 120 is pretty easy with this one. But like I said, I think it can go even further. So if we look over here at the daily ATR, you can see that it's currently at $5.60. So why is that important? Well, typically what we see when a squeeze fires is 3 times the ATR of that time period. We're looking at the daily, that's where the squeeze is on the daily, so we would be looking at 3 times the daily ATR of 560, so roughly a 1650 move. We can just call it 15 to make it nice and round, but if Robinhood was to move another $15, that would put it up near 130. Seems like a stretch right now, but with a squeeze, it's totally doable, especially with a high momentum stock such as Robinhood. So even though we've already taken off the majority of our trade for a double, I don't think it's too late necessarily to get into this one, especially if you can get a pullback, to this tree line right here at 112.59. If there's a little drop on Monday or Tuesday to 113 or 112, I definitely think that that is a buy the dip opportunity on this one. And in fact, Allison, who's also a trader in the small lot trading room, she liked this setup so much that she entered a debit spread of her own. This one was for 120, 125 calls. So yeah, I think this one has a lot of room to go. I also want to show you some other trade ideas setting up though, that I think could be good potentials to enter this week. So the first one I'm going to show you is Rocket Lab. And I have some fibs set up here just so that you can see. Now this one doesn't have voodoo lines, or yeah, it doesn't have voodoo lines on it. So it's a little bit helpful to get some additional fib levels of your own right here. So you can see that the all-time highs were at 53.44. I would definitely want to see that get taken out. That would be my first target. So if you look at where price is right now, it is sitting at the daily 21. It's had a great uptrend, but it did drop down heading into earnings. It dropped down to the daily 21, started consolidating, and what happened? It started to develop a daily squeeze. Now, I'm not showing you any lower time frames right now, but it does have squeezes on intraday time frames as well. So if I look over here, another chart, I can see that it has a 30-minute squeeze, an hourly squeeze, a 2-hour squeeze, a 4-hour squeeze. So that's a really good recipe for price, for price to fire long. Once if you can kind of think of those intraday squeezes as like a little domino effect. So once the 30-minute fires, a lot of times that will trigger the hourly squeeze to fire, and so on and so forth until we get that daily squeeze to fire. And then if we look at, again, because we want to look at the ATR for this one. So the ATR on Rocket Lab is 288. So I would say you would be looking for, roughly a $7.50, $8 move to the upside. So right now it's at 44. I would be looking for somewhere around 52, which that leads us right to that all-time high at 53.44. So my idea with this one is I really like the chart. I didn't want to enter it on Friday because it had earnings, I believe, that morning, Friday morning. And while it did initially get a nice pop, it did fall right back. And it still closed the day higher than the previous day. But with that much of a drop, I wanted to give it one more day, possibly two, just to digest and see what happens. If price ended up falling below the daily 21, then it would be a no-go for me. But my idea is as long as it opens up between the daily 21 and that first ATR, I'd be looking at buying these calls for probably 3 to 4 weeks out, and waiting to see if it could take out that high at 53.44. That would be my first target. And then I would look to scale out even further than that. So my next idea is on IBIT, and I would also want to buy calls on this one, $66 calls. I can't remember what month I was looking at, but they were only about $1.70. I think it was for September expiration, because if I recall correctly, IBIT only has monthly expiration. So hopefully I'm right on that. I don't have my option chain set up right now, but that's my idea for this one. So really similar idea. It's had a great uptrend. It's for the most part maintained the daily 21. We had a little bit of an oopsie right here, but price reclaimed the daily 21, and look at that. It went all the way up to 3 ATR because look at this beautiful squeeze right here. That is what a squeeze can do. Once it fires, it causes a bigger than expected move, usually 3 ATR. So if you're sitting at the daily 21, you're going to be looking up at this upper level right here. So here it is again, sitting at the daily 21, and yep, you called it. It's got a daily squeeze. It also has a 30-minute squeeze, which by itself, it can be okay. A lot of times that can trigger the daily squeeze to fire. And of course, you don't need any intraday squeezes to cause the daily squeeze to fire. It's just nicer when those are sitting there. It's kind of some extra juice that you can get out of it. So where would I be looking for this one to go? Right up to that upper level, make a 3 ATR move right up to about 70 or 71. So the daily ATR on this one is 150. If we times that by 3, we get 450. That puts us right at about $70. Okay, and then finally, I would like to show you Goldman Sachs. So there's a couple of reasons that I want to point out this chart. So the first is, as John Carter often likes to point out, so goes Goldman, so goes the market. So even if you're not trading Goldman, it's a good idea to keep an eye on it, because oftentimes it will kind of not lead the way, that's probably the wrong word, but it'll be a good indication to market sentiment and what the market is going to do. So once again, we have a beautiful daily squeeze. We also have multiple intraday squeezes, 30-minute, 1 hour, 2 hour, and 4 hours. So again, that can have that domino effect that I was mentioning earlier, where those intraday squeezes can trigger the daily squeeze to fire. Now the daily ATR on this one, because this is a bigger one, is almost 14 points. So what I would be looking for as far as a move in Goldman is right up to this fire line at 777. I would look for price to hit that level. So because this is such an expensive stock, I think even people with large accounts might have a hard time just buying calls on Goldman. So I would be looking at opening up a debit spread on this one, and I would be targeting that 777 level. Kind of a nice number, right? Okay, finally, last thing I want to show you is SPX. Let's just look at where we are for the week. Now, I mentioned last week that I don't think we're going to take out the all-time highs this month. We're getting close though. So I might have to eat my words on that. In fact, let me just zoom in a little bit. So on Friday, we made a high of 63.95. So that's about 30 points away from the all-time highs. That's not very far. We do have the call wall at 6,400. That can act as resistance. And of course, August is seasonally a weaker month. So far, we haven't seen a lot of weakness. Yes, we have seen some. We did get a huge flush on the first day of August. And we came all the way below the daily 21. I thought that was going to trigger something larger, but this market just cannot be stopped. I mean, look at that progress that we made this last week. So, like I said, I might have to eat my words. Maybe not. Maybe this week we see another retest of the daily 21, especially with that call wall sitting right there. However, I want to point out some upper levels just in case we do take out that all-time high. So I'm going to put on our monthly quant pivots because that is always a good roadmap as to where some other resistance would be. So we have the first quant pivot for SPX for the month of August sitting up here at 64.92. Now, it only touches that first quant pivot 28% of the time. That means that 72% of the time it doesn't even get there. So I think even if we take out those all-time highs, I do think we're likely to stay below 6,500. And then if we put on some fibs, let's see what that looks like. I'm just going to draw some fib lines. This is just a really short time period, but the first extension that I'm seeing is at 64.77, and then the next one is 65.08. So I do think that it's safe to say that even if we do take out the all-time highs, we're probably not going to get to or much past 6,500. I also want to point out the put call ratio because that is something that I always like to look at. So this is just telling us how many market participants are long and how many are short. So it's this chart right down here. And what I'm actually paying attention to is not the candlesticks themselves, but actually this EMA right here. This is the 8 EMA. So when it's down here below 0.7, which 0.7 is this white line that I've got laid out right here, when this EMA is below 0.7, that means that most people that are participating in the market are long. It's really hard for the market to rally when everybody's already long. So, and that's kind of what we saw really in the last week of July. Even though we did make new highs, it wasn't aggressive. It was pretty much, a slow grind higher and a lot of choppy action. So now this EMA has started to come above that 0.7 level. That's a good sign because what that means is that not a lot, but a portion of the market participants have started to get a little bit more bearish. Now, why is that good for bulls? It's good for bulls because now that means there are people that are available to go long. Sometimes it's just because they're selling their bearish position, or sometimes it's because they're actually, able or willing to get long the market. So what we typically want to see before, we can really get aggressively long again is for that EMA to get more towards the middle of this area right here. We might not get it because look at what happened last time. Last time that EMA came up above that 0.7 level, it came right back down again. And that's when we started to see another move higher in the market. So I am encouraged by this little move higher. I'm not sure that, it's quite ready yet, but we'll see what happens. This has been an incredibly strong market the last few months. Like my friend Henry Gamble says, there's nothing bearish about all-time highs. I completely agree with him on that. At the same time, it does give me a little bit of pause, and it does make me want to be a little bit more cautious, not have quite as many positions on, maybe make them a little bit smaller. So in our small lot room, I typically like to use a position size of between $500 and $600. Now I've got fewer positions than typical. So I think right now we're in 3 different positions as opposed to sometimes I like to have 5. And I'm position sizing for between $400 and $500 per position instead of between 5 and 6. So that's how I kind of handle this type of environment. I still want to participate. I don't want to sit out completely because there's nothing telling me that I should be out completely, but I just want to be a little bit more cautious. So we'll see how this week shapes up. Don't forget, it is options expiration week. We often call this ChopX instead of OpEx because we can see some choppy action. I don't know if that'll play out this week, but it's not uncommon when we do. And then watch out for Friday when all of those contracts have to be unrolled. So if you're not an options trader, which I think most of you who watch these videos are, but if you're not an options trader, OpEx is something that you should always be aware of, even if you're not trading options, because that date does affect the entire stock market. So whether you're trading stocks, futures, or options, definitely be aware of the 3rd Friday of every month, which is this week, August 15th, 2025. So thank you so much for watching. If you like this video, please make sure to like and subscribe. And before I forget, I have one more thing to show you. We are running a special right now in our small lot trading room at Simpler Trading, where you can try us out for a full month for only $7. That is a smoking deal. So not only will you get my trade alerts, you're also going to get John Carter's trade alerts sized for a small account, and you're going to get Allison's trade alerts, and she's on the mic multiple times every day walking you through her process and her strategies and how she comes to the trades that she does. So make sure to check us out, and I'll see you next time.